Hello traders, Gary Wagner here, approximately 10:33 in Honolulu, 4:33 in New York on Monday, 14th day of March 2022, and this is the daily report for gold and silver. As you can see, the relationship between Honolulu and New York in terms of time has moved back to a 6-hour differential. Traders, gold is currently trading at $1,955.90. That is down $29.10 on the day, or almost 1.5%. We did send out a trade alert to buy April in Forex Gold this morning. Our entry price was $1,957, roughly $1 above current pricing. We have placed a protective stop at $1,947. We placed this particular trade because we felt that the risk-reward ratio wasn't in alignment. It is a high-risk trade, but a low-risk trade in terms of potential drawdown. If our stop is executed, we would take a loss of $10 per COMEX contract, and we expect that if it does move up from this price, we would see at least a $30 to $45 rise. Silver had a strong decline today of 3.366%, or 88 cents, with the most active silver futures contract currently fixed at $25.28. But by far the largest drawdown today was in palladium futures, losing $419.80, a 15% drop, taking an ounce of palladium to $2,377. Lastly, I do need to update our GLD trade. We entered that trade at $168, and last week we placed our stop at $184. If you take a look at the open on Friday, it opened at $183. I'm marking it at $183.65, which means that effectively we were stopped out Friday morning. We got in at $168, out at $183.65 for a profit of $15.65 per share. We remain neutral with no active trades in GLD or SLV currently. As you can see, we are looking at a daily chart, and gold is currently fixed at $1,954.50. As I said, we do have a tight stop on this particular trade. It would need to trade below today's low, which came in at $1,952, because our stop is at 47. Current pricing, as you can see, right at a 42% retracement in terms of the low, and it's trading just above that, as I said, at $1,954.60. The key is that Ukraine's war continues to rage on. They did hold a video conference today, a negotiation, which yielded no results. The fighting has continued through the weekend, and Russia has absolutely escalated its attempt to overtake the sovereign country of Ukraine. That being said, we do have the FOMC meeting to begin tomorrow, conclude on Wednesday. Expectations, as you read in our opening letter, are very, very high. I believe 98% plus probability that the rate hike will be a 0.25% rate hike. Currently, we have Fed funds rate at 0 to 25, and there's a 98% plus probability that interest rates will go to 25 to 50 basis points and be announced on liftoff day Wednesday this week, which would be the first rate hike since the Federal Reserve lowered interest rates to their current yield of basically zero in March of 2020. There is unquestionably a deep decline that we are currently witnessing in gold. It continues to trade under pressure, now about $1 off of the low. As I said, our stop is at 47. It is a high reward but high risk trade. Nonetheless, it does change one thing that is very important, and that is our current model for where we believe gold could end up at the conclusion of a fifth wave. We are under the assumption that wave 2 concluded back at the end of January at approximately 1782, taking the price of gold from about 1780 up to these highs that were achieved last week at 2079. And currently we have a decline, which is definitely a wave 4 decline of approximately 42%. If in fact it holds in this area, we've had to adjust our Fibonacci extension, in which we're looking at the price range of wave 3 and projecting where it would go if there was a 0.618% extension of wave 3 into wave 5, which declines our upward target to still a new record high of $2,150 per ounce. But this model is projecting a lower target than, of course, on Friday before today's dramatic decline. If, of course, we see a continuation of this correction down to, let's say, 1930, we would then have to adjust this. We would then discuss that tomorrow. Maintain your current long position. Maintain your current stop. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.